Hey guys, I'm Pete Tverdov, owner of Tverdov Housing. Today I want to share with you guys what a 1031 exchange is, how you can use it, how you can make a lot of money, pay very little tax, and hand off a lot of wealth to your kids in the future. So 1031 exchange is basically a like-kind exchange of property for property that is of equal to or greater value. Now, there are some granular details that you could get into. I'm going to try to keep this video short, so I don't want to get too detailed with that. Anyway, so let's say you got a house, right? And this house is worth $200,000 when you bought it, okay? And now because of inflation, because our government's printing money like no tomorrow, 2 years from now, the house is worth $300,000, okay? 300 minus 200 is what? 100, right? So you've now earned 100K in equity. Well, if you go to sell that house, the IRS is gonna come and they're gonna say, thank you for making $100,000 on the house. We would like 30% of that in taxes. So you're gonna give the IRS 30 grand, right? And then you're gonna keep 70 grand, right? Minus commissions, whatever else, and then you do whatever you want with that money. What smart people do, what investors do, what I personally do, and a lot of my clients do, is 1031 exchange it. So they say, okay, I'm gonna sell this for $300,000. I have no interest in giving the IRS any money that I don't have to. I'm gonna find something that is worth $300,000 or more. Now, the IRS actually creates rules. And I'm not an accountant, so obviously you want to speak to an accountant about this, but if you read a little bit about the tax laws in the United States, they really favor real estate investors. Why? Because the government wants people to create housing for other humans living in the United States. Kind of makes sense, right? So they create lots of incentives for people to make that happen, which is why they have this 1031 exchange. And it's all the more reason why getting rid of it is asinine, okay? That's another topic. So anyway, so let's say you made $100,000 on this property if you sell it, right? So you don't want to pay any tax. So what you're going to do is you're going to identify another property, or you could identify up to 3 properties, right? So you can identify up to 3 houses, very crummy houses that I drew there. And you have 45 days from closing to identify these houses, right? So if I sell this house today, 45 days from now, I must identify what I want to exchange. If I don't identify, I have to pay tax on this money, okay? Once I identify the properties, this 100K goes to an intermediary. I'm not going to spell the whole thing, okay? And there's an intermediary that basically acts as a third party, and they say, okay, we're going to hold your money, and when you're ready to buy another property, we are going to give that money to that seller. You will never touch it. If I touch it, I have to pay tax on it. So the equity I earned on that property goes to the intermediary, all right? Let's say I've identified, out of the 3 properties I picked, I actually went under contract on this one. Now I have 6 months to close on that property from the date I sold this. Not 6 months from 45 days, 6 months from this. Once you identify that property, you've closed, and now the 100K you made in equity, you keep, you pay 0 tax on. So pretty cool so far, right? Now I want you to think about it. When you go to Starbucks in the morning, or you go to Dunkin' Donuts, somebody owns that Starbucks. I'm not talking about the franchise, I'm talking about the building. When you go to CVS, when you go to Rite Aid, when you go to Home Depot, somebody owns those buildings. How, right? So what I've learned is the real estate strategy you want to follow is called defer, 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 die. So you keep implementing this strategy where if you're going to sell real estate, you have to buy something else, right? So now, right, I bought this house for $300. A few more years pass and it's worth, and I'm going to keep a running score, right, of the equity that we've saved, so right, so it's 100K. A few more years pass, right? We I don't know, we build an addition or we split it into 2 units. Now it's worth 600K. So what's 600,000 minus 300,000? 300,000, right? So you have 300,000 of equity in this property. Again, if I sell it now, I have to pay tax on that 300K. Or I do a 1031 exchange. So now, maybe I buy a little 8-unit apartment building. The other thing with 1031 exchanges, you could buy something of equal to or greater value, or you could buy multiple properties that are less than the value of your current property, but when you combine them, they equal more. Okay, so you could buy, like if you're selling this for 600, you could buy a house for 400 and 400, because combined they equal 8. So now you own an 8-unit building, and you again deferred 300K in equity, right? You rolled it into this 8-unit building, and then years pass, and you roll that into, I don't know, a 16-unit building, right? And now you're an old man, and you don't want to deal with tenants. You say, you know what? I want to own a Starbucks that's got a triple net lease and is worth $5 million because I've constantly deferred the capital gains I'm going to pay, right? So now this is a $5 million building, right? You live to be an old man, very successful. You die in your bed, and now your kids inherit this, right? And you bought this for $5 million, and the day you die, it's worth $8. So you bought it for $5. Today it's worth $8. This is why you do defer, die, because you've been deferring taxes this whole time, perfectly legal through the 1031 exchange, and now you have this monster real estate portfolio. The IRS says to your kids, you inherit this at a stepped up basis. So IRS says, we don't care that dad bought this at $5 million. He's dead. We're gonna act like you guys bought it at $8 million. So if you kiddos turn around and sell this building for $8 million, how much tax are you gonna pay on the $8 million? 0. Okay? Don't hate. That's written in the tax code. You don't like it? Vote for somebody to change it, I guess. But that's how people create a lot of wealth for themselves. That's how people create a lot of wealth for their kids. Generational wealth, that's like the buzzword people love using now. It's something I plan on doing. I've executed 1031 exchanges for myself, for clients, both on the sell side and on the buy side. It's a tremendous, tremendous strategy. It's why so many people love investing in real estate in the United States. As it pertains to New Jersey, I like to think I'm one of the best around as a real estate broker dealing with multifamily property. So if you're looking to buy multifamily property, I can certainly help you with that. I know 1031 exchanges very well. I don't know everything. I'm sure I may have made a few mistakes in this video, but you get the general gist. It's a very powerful investing tool, and if I could help you guys in any way to execute it, I'm more than happy to. So if you liked what you saw, feel free to like the video. You can subscribe to our channel. We come up with educational videos from time to time. And if you want to reach out to us, we'll post our website in this video. You could click that. There's a contact form. You can follow us on Instagram. There's plenty of ways to find us, and we will help you guys build a lot of wealth.